If you have not held through a bigger correction than this, you are not a hodler yet.
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Welcome to the Bitcoin Bulletin Podcast, Weekend Update Edition. And of course, this weekend, the price is the news and the news is the price. Often that is the case, but obviously if you have been paying attention, and almost everybody has, Bitcoin has corrected significantly, currently clocking in at only $35,395 per Bitcoin. And I say that with a dash of irony because Bitcoin is worth $35,395 a piece. And that is pretty amazing to some of us who have been into BTC for more than just this bull run. As I alluded to in our introduction, if you have not held through a bigger correction than this, you are not a hodler yet. We tweeted that just yesterday. And of course, if you don't follow us on Twitter, please give us a follow. We are at BTC Bulletin Pod, at BTC Bulletin Pod on Twitter. And we would definitely like to build up our subscriber base. Real quick look at the stats. As I said, today is January 23rd, 2022. We are at a block height of 720,098. Bitcoin is worth $35,395 a piece, or 2,825 sats per cuck buck, 28:25 Moscow time. That brings Bitcoin's total market capitalization down to $670.3 billion. Just last Wednesday, when we did our DCA Wednesday episode, it was $792 billion. So we have seen a significant correction, although nowhere near those 80% corrections, those 80% drawdowns that we tend to see every Bitcoin cycle, every halving cycle. Another transaction statistic, another statistic that I like to follow, as you know, is our 24-hour transaction rate. That is down significantly from Wednesday as well. We're only seeing about 2.45 transactions per second. On Wednesday, it was 3.24. I consider 3.24 pretty healthy. 2.45 is pretty anemic, and that would coincide with the significant drawdown that we've seen. Currently, there are only 648 transactions pending in our mempool, only 0.32 megabytes, so less than one block to clear. 1 Satoshi per byte transactions are going through. I did one just last night for 1 sat per byte, and it went through in the very next block in under 5 minutes. So that's good and that's bad, I guess. If you were one of the proponents of a Bitcoin fee market, wanting to see high fees to sustain miners, you probably don't like that. I personally think 1 sat per byte is a benefit. It is a positive. I think by the time we phase out the mining reward, Bitcoin will have a fee market simply because Bitcoin will be so expensive. That 1 sat per byte will be worth a lot more than just a couple of pennies. So there is that. Since we spoke last, we had an upward difficulty adjustment of 9.3% in the hash rate, the difficulty to mine a new block. That was because we had hit a brand new all-time high as far as network hash rate is concerned. However, now we're looking at a forecast downward adjustment of almost 5% downward, and that's because blocks are currently coming in at 10 minutes and 29 seconds. To the average hodler, to the average stacker, that means absolutely nothing. To miners, however, that's good news because you're going to be making a little bit more money for each terahash that you're contributing to the network. Just a few days ago, we were celebrating because we'd been stacking or dollar cost averaging for 6 months now. And if you haven't been following us, and if you would like to find out a little bit more about the DCA strategy, We are dollar cost averaging $20 worth of Bitcoin every Wednesday, and we've been doing that for 6 months now. We had purchased what we thought was relatively cheaply just last Wednesday at only $41,860. Previously, the cheapest we'd ever stacked since we started last July was $38,900. So if Bitcoin does not recover between now and Wednesday, we are going to be lowering our dollar cost average. Our average cost basis down significantly because it will be the cheapest we've ever purchased. So don't forget to check back Wednesday and see how that's going, especially if you're interested in exploring dollar cost averaging as a method for stacking sats. So I'm just going to come out and say it. The fact that Bitcoin appears correlated to the stock market proves that the vast majority of the money that's been pouring in during this cycle doesn't have the first clue about what Bitcoin is all about. It is basically just degenerate gamblers and Wall Street bros that were looking to get rich quick. Because the fact that people are panicking that the stock market has been going down, that tech stocks have been going down, means that you do not see Bitcoin as a store of value, that Bitcoin is not a safe haven for you, if that is your opinion. Because and we saw it during the crash in March of 2020, the virus crash, when the market tanked, so did Bitcoin. But we also saw that Bitcoin recovered way faster than the market did, because I firmly believe that BTC is gold 2.0, that it is designed precisely to be valuable in conditions such as this. So many Bitcoin influencers keep saying something along the lines of, don't worry, the Fed can't really raise rates without tanking the economy. They're bluffing. Sure, they'll probably raise 25 bips or 50 basis points, but then just as they did after they tried to stop quantitative easing after the 2008 collapse, they'll have to say, we made a mistake, and go back to knocking interest rates down. Max Kaiser's famous for saying you can't taper a Ponzi scheme. And all that may be true, but it should not matter to a Bitcoin maximalist. Bitcoin is about sound money, not about keeping all these weak hand speculators pouring in. The more weak hands that get shaken out, the more true believers, the more true hodlers have a chance to own a larger portion of what's going to be the future. To be fair, some of this is just noobs who haven't fully gone down the rabbit hole yet. If this is your first Bitcoin cycle, if you've just started investing on the way up, it can be scary. A lot of people say that's why you shouldn't watch the price all the time. And I disagree with that. I like to watch the price all the time, but I would say what you shouldn't watch is the value of your portfolio. Granted, that's related to price, but if you're constantly checking your stash and seeing how much it's worth in US dollars, that can be unnerving. If you had a full coin and you saw it go from $69,000 all the way to $35,000, it looks like you lost money. But again, if you didn't sell, you didn't lose money. And eventually the goal is to just get off that fiat standard, and that is not going to matter. If you've been to the grocery store recently, if you've seen the fact that, well, I just bought a 12-pack of beer the other night, and it was $21.35 for a flippin' 12-pack. A 6-pack was $12. Inflation is real. And eventually when it costs $10,000 to buy a loaf of bread, the fact that Bitcoin is only worth, whatever it's worth at any particular time is immaterial, because Bitcoin is going to be your store of value. One Bitcoin will always be worth one Bitcoin. Again, there's a lot of people who just flat out don't believe in Bitcoin, that we're in it for the quick buck. That happens every 4-year cycle. When Bitcoin pumps, people see it and they jump on board, and then they get shaken out, and that's what's happening. It's also interesting to see what happened to all those altcoins getting wrecked during the crash, the so-called crash. How's that Dogecoin doing, Elon? Obviously, there's a lot of blood in the streets right now, which, if you listen to Warren Buffett or pretty much any other brilliant financial analyst, that means it is time to stack. Again, not financial advice, just my 2 cents. Adam Meister had a pretty amusing story on his This Week in Bitcoin show on Friday. Adam's clearly one of the more entertaining voices in the Bitcoin space, in my humble opinion. And he related a story that he was walking through, I believe it was a Panera parking lot in Midland, Texas, and he saw a quarter on the ground. And he bent down and he picked up the quarter, and he said, even though he's a millionaire, he felt emotion, excitement in finding free money, and that he felt more emotion, more passion about finding a quarter on the ground than he feels about the current price of Bitcoin. And he has been stacking. We know he's been stacking since Bitcoin, since he told you to buy $10,000 worth of Bitcoin in 2013. And of course, if he hadn't purchased a single Bitcoin more than just what he bought on that episode, obviously he is a millionaire now. Plan B is still standing by his stock to flow model on Twitter. His most recent tweet, he tweeted out that he bought his first Bitcoin in 2016 for $400. In March of 2019, when he published his stock to flow model for the first time, Bitcoin was $4,000. Now, January 2020, BTC dropped below 40,000, which he emphasizes is still within his second deviation band. Some are worried about the dip, but, quote, I am quite sure that BTC will add another zero in the next couple of years. Embrace volatility. And he included his band chart for his stock to flow ratio, which is solidly in the second deviation band downward from the mean. But that has happened before. And if you look at his chart, each time it has done that, it has rocketed to well above the mean, and in fact into the second deviation band of the mean to the positive side. In fact, looking at the same chart, you can look back and see the previous bull runs, the previous halving cycles, and they have all been at least in the second deviation band above the mean, or even above the second deviation band. And we did not see that. We did not get beyond one standard deviation from the mean stock to flow model during this last bull run. And that is why he and many people firmly believe that this bull run is not in fact over. Obviously, last summer we saw the same thing happen. We got knocked all the way down to about 28,000 from 60,000. This time we've dropped from 69,000 to 33,000-ish so far. Although the last day or so it appears to have been stabilizing around the $35,000 range. If you listen to Anthony Pompliano's podcast, normally on Saturday he has Will Clemente doing some technical analysis about the price of Bitcoin. Will Clemente was not on his show, but he subbed for him on his own show, that is. And he made the assertion through various methods of analysis that Bitcoin, if it crashed through its support at 40,000, which it did, should bottom out somewhere in the low 30s. And that is where we currently find ourselves. So I do not have a crystal ball, and I do not give financial advice. I do know that I believe that Bitcoin is going to be worth a heck of a lot more than it is right now before I would ever consider selling. And of course, hopefully I will never sell. My goal for stacking sats is to hopefully build some intergenerational wealth for my family, for my kids or my grandkids. And that if I do sell Bitcoin, it wouldn't be selling Bitcoin, it would be spending Bitcoin. It used to be, I believe, American HODL that said the plan is to out-HODL the IRS. One day you won't have to be paying capital gains taxes because we will be on a Bitcoin standard. Bitcoin will be the currency. And whether or not that is true certainly remains to be seen. I don't think the central government or the central banks of any country would be willing to give up their power like that. The fact that El Salvador embraced Bitcoin and made it legal tender was probably specifically because they did not have their own currency. Their legal tender in El Salvador, obviously, if you remember, had been the US dollar. And so countries that operate on a US dollar standard, well, they get screwed because when the US prints tons of money, as we just did, they don't benefit from the cantillon effect. They don't get the dollars until after inflation has smacked them upside the head. And so it was pretty easy for them to move into a Bitcoin standard because they weren't giving up any control. Speaking of El Salvador bought the dip once again. President Nayib Bukele tweeted a reply to one of his previous tweets where he had said that it appeared that he had missed the dip. He was lamenting missing the dip, and then tweeting on Friday, "Nope, I was wrong. Didn't miss it. El Salvador just bought 410 Bitcoin for only $15 million. Some guys are selling really cheap." I am continuously impressed by President Bukele. If Bitcoin does what I think Bitcoin's going to do, what I hope you think Bitcoin's going to do, El Salvador is going to be doing really well in a few years. Even without building Bitcoin City, their free autonomous zone, they're basically their equivalent of a Dubai or a Shenzhen, with their new city funded by their volcano bonds. El Salvador is positioned to be the jewel of Central America, definitely the Monte Carlo of Central America, if not the Dubai of Central America. And that is really exciting. You're going to see a lot more than just Max Kaiser and Stacey Herbert moving to El Salvador. That migrant caravan northbound is going to be a migrant caravan southbound sooner rather than later, in my humble opinion. So anyway, he bought 410 more Bitcoin, he said, for a price of $15 million. That works out to about $36,585 per Bitcoin. And if Bitcoin does bottom out, if it stabilizes here, even if it just goes sideways, then that looks like that he came pretty close to buying the bottom, to buying that dip. Again, they say it's not a good idea to try and catch a falling knife, and hopefully he didn't. Also, as a side note, he only bought 410. Last time he tweeted about buying the dip, he bought 420, and he was cheeky about the 420 number. So 410 instead of 420 this time. If you find that amusing, a lot of people do. Again, the hash rate is tapering off from the new all-time high. Like I said earlier, this is forecasting a difficulty downward adjustment. And this is great for you garage miners out there. If you've got an S9 in your basement, an S9 in your garage, that means you're going to be making more money. To the average person using the Bitcoin network, well, if you're using the Lightning Network, it means absolutely nothing. And again, it means nothing to you if you're transferring Bitcoin even on-chain. That 10-minute goal is a 10-minute average. Sometimes you've seen blocks take an hour or more, and sometimes blocks come in every 30 seconds. So coming in at 10 minutes and 29 seconds versus 10 minutes makes absolutely no difference to you, but it means that miners are going to be making more money. Mining at home is always controversial on Reddit and Twitter. If you're on our Bitcoin, etc., you see people are constantly asking about whether they should mine at home. And mostly people saying, no, you're an idiot if you mine at home, just buy Bitcoin. And that is a decision that is up to the individual. There's various reasons why people do choose to mine at home. I've posted some replies on Reddit explaining what my personal opinions are. And let me just hash out a few of those here, no pun intended. Right now, probably the oldest piece of equipment that's out there running are the Antminer S9s. They're about 5 or 6 years old now. The newer S9s crank out about 14 terahash, and they use about 1,300 watts to do that. The newer miners are certainly a lot more efficient. If you're paying an average of 10 cents a kilowatt hour, which is pretty standard in the United States, I think where I'm at, we're actually paying 12, but in plenty of places they're paying more like 8, or even less. But let's just say at 10 cents a kilowatt hour, because it's a nice round number. 10 cents a kilowatt hour means it's going to cost you 13 cents an hour to operate that Antminer S9. And that means that you're spending $3.12 a day. And currently your S9 is generating about 6,500 sats a day. So at the current price of around $35,000, that means you're mining about $2.27 a day, or losing 85 cents a day, because you're spending, like I said, $3.12 to mine $2.27. But one thing that many home miners take into consideration, that mining is the ultimate dollar cost average. Your S9 or whatever you're running does not care what the Bitcoin price is. It just keeps hashing. So at $69,000, if you were mining, or if you were mining then and the difficulty were the same, which it was not, it was actually easier, so you were mining more sats. But just using the current difficulty for simplicity's sake. At $69,000, that was $4.48 worth of Bitcoin a day for your $2.27. So it isn't quite cut and dried. And of course, there's other reasons why people mine. Some people mine because, hey, you're getting KYC free sats. So as Matt Odell likes to say, even if you're paying 20, 30% more, that's a pretty cheap premium for KYC free BTC. Obviously, you would pay significantly more than the going rate to buy at an ATM or from someone anonymously or from, local Bitcoins, I guess, isn't KYC free anymore. But it all comes down to your priorities. Some people do it just for fun. Some people do it to secure the network. Some people do it for the KYC sats. Some people just do it because it's an easy, automatic way to DCA. And instead of DCAing weekly or monthly or every paycheck, you're literally DCAing every second. Of course, another big factor to consider is if you were spending $30,000 on the latest generation of ASIC, you're going to have to recoup that cost. But if you've picked up you could pick up an Antminer S9 during the last crypto winter for like $30. So if you have a $30 Antminer S9 and you're someplace where you're paying less than 10 cents a kilowatt hour, you're still making money. Anyway, that's my 2 cents on mining. And I only bring that up because every time I'm on Reddit, people are whining about mining, and people are very opinionated one way or another. So I definitely wouldn't go out and buy $30,000 worth of hardware right now, especially because if we are seeing the end of the 4-year cycle and getting ready to enter a crypto winter, remember S9s, which were pretty state-of-the-art after the 2017 bull run started to turn into the 2018 crypto winter. They were recycling S9s for the aluminum. So who knows? Maybe you'll be able to pick up an S9 or an S19 on the cheap, and then become part of the network. Or just buy sats. You do you. And again, hopefully you'll be joining us on Wednesday when we're going to stack $20 more worth of sats. Hopefully we're going to drop our dollar cost average, or our average cost basis, down significantly. We started this experiment. Like I said, we started this experiment back in July, on July 28th, when Bitcoin was 39,000. Since then, we bought all the way up to the high. Well, the most we paid was 65,969, and then we've been riding that wave back down, purchasing last Wednesday at 41,860. Hopefully, this Wednesday we'll get a chance to pick up some $35,000 BTC. But if we don't, if BTC bounces, if it recovers, I'm good with that too. The important thing is we're going to keep dollar cost averaging, and we're going to keep stacking sats. And hopefully you are too. So as we like to say, keep on stacking those sats, you sexy sat stackers. Please consider giving us a follow at BTC Bulletin Pod. And please like and subscribe. Hopefully we'll see you on Wednesday for DCA Wednesday. Hey, if you've been enjoying this episode, if you'd like to see us do more, if you'd like to help us out, if you'd like to help us contribute to that stack, there are a number of ways you can support this episode. The easiest way is, as you know, when we do stack on DCA Wednesdays, we do Cash App. We use the Cash App. Cash App is not a sponsor of the show. We don't get any money for using Cash App. But we do have a referral code link in the show notes. And if you don't have Cash App and you sign up using that Cash App referral link, you'll get $5 free for signing up, and we'll get $5, and that'll help as well. I've also written a couple of books. The one that is most appropriate to this podcast is Understanding Bitcoin for Noobs, and that is available at Amazon or barnesandnoble.com. And of course, if you purchase that book, that will help us out as well. You can also sponsor us. You can also not sponsor us, but you can also contribute to the podcast directly through anchor.fm, and there is a link again in the show notes to do that as well. And hopefully one day soon you will even be able to tip us sats on Twitter. And we do have a Base32 Bitcoin address in the show notes as well, if you would like to help us out by contributing Bitcoin. Again, we don't have any sponsors. I'm doing this show because I think it's a lot of fun, and I want to help spread my knowledge and experiences to the masses. So we're happy to do this for free. But if you do feel like you are getting some value out of listening to the podcast and would like to help us out, or even if you would just like to help us make sure we can continue DCAing on Wednesdays, you can help support us in any one of those ways. Again, thank you for listening, and keep stacking those sats, you sexy sat stackers.